Boyd.
Here.
Chairman Carr.
Here.
Thank you.
Thank you, Carla. Do we have any public comments,
No,
Carla?
sir.
Okay, thank you. So we have several items, 3 items, I believe, that were taken under advisement for the purpose of this purchasing committee. And I want to remind the committee, this is the only business before the committee today by statute. So I'm going to turn it over to Ed and kind of let Ed take us through the process of the evaluation for each one of these products that were reviewed. So Ed, why don't you help us out here?
Thank you, Chairman. First, I could introduce Corinne Gunn. She's our insurance generalist. She handles a lot of the retirees and Medicare, pre-Medicare retirees, also pre-65s. And to my right here is Molly Howe. She is the Assistant Director of Benefits. So I know you got a lot of information, as you can tell. This was the final 2 bids that when we narrowed it down, and a lot of information. Gallagher was able to hook us up with a group called Retiree First, and they worked hand in hand with us, trying to make sure the bid's very complex. There's a lot of information in here. You're trying to make sure you match almost to a T exactly what the retirees have now, that you're not taking away any benefits from them, and you're trying to make sure you got the best product for the county. So the current price is $261. That's the rate before the county pays their part and the retiree pays their part. And on the very first page, you'll see, and it's the very last Medicare Advantage exhibit. You'll see in bold, number 2, Humana option 3, $220.28. And the best one from Cigna was number 4, Cigna option 1 and 2 at $250. Again, I mentioned the current rate is $261. So you can see there's a reduction in the rate. And that was one of when we were looking at all the submitted bids, there were several things we looked at. Pricing was definitely one of them, so it's $261 per member per month pricing. So at the insurance meeting, Marissa Combs was there, and she gave basically the presentation to the insurance committee discussing this. She was unable to make it to today's meeting, so I'm going through what she went through at that meeting, but mainly if it gets too deep in the weeds, we may have to punt and come back the 13th at the purchasing meeting to defer this. But right now, what we've looked at in working with Gallagher and working with Retiree First is that your bids are pretty close, but neither one of them are going to be as what they have now, because Cigna divested. So you have Healthcare Services Corporation, HCSC, that's referred to in here, which Cigna divested to, and then you also have Humana. So in matching everything up as best as everything can be, if you look under recommendations, you'll see what the recommendations. But if you go to the second page, you can see the recommendations for HCSC, and then you also see the recommendation for Humana. At the top, you have considered the known savings of Humana, which is significantly less than the 2025 current rate. Consider the overall improvements with Humana, and then also remember that the member experience will change either way. So they're going to change how they go into a website and get their information. It won't any longer be Cigna. It'll either be Humana or HCSC. So, there's going to be disruption regardless, but we think it'll be extremely minimized here in either one of these recommendations. But the Humana option 3 is, if you look at the next page, the bottom of Humana option 3, you can see what they have as far as what they're offering, and there is a difference between those offerings and those improvements. If you look on the second page, you can see the improvement to vision is $250 per member. You can see the improvement to hearing. Our hearing that we have now is benefit is $2,000 every 2 years, and the benefit now is that Humana offered was $2,000 a year. They have an improved podiatry benefit. They also have an improved acupuncture benefit. And then the biggest difference that you'll see between them is the maximum out of pocket, which their maximum out of pocket is $2,100 compared to what we have now is $1,250. So, but when you look at their ancillary and you look at their tier 1 and tier 2, there is with Humana, you look at it and it is no copay. So that's a greater benefit than what we have now. So when you're trying to balance out the additional hearing benefit, the additional dental and vision benefit for those that use it, and you also try to balance that maximum out of pocket, the recommendation is to go with Humana, because they match as close as, well, actually you get some enhancements, you get some improvements over what we have now.
And it's cheaper.
And the rate is cheaper, yes.
So the recommendation of the insurance committee was?
Humana, option 3.
Thank you.
At the per member per month, $220.28.
Ed, do you concur as the Director of Risk Management with that recommendation from the insurance?
Yes, sir.
Okay.
Let me ask a quick question, Ed. Starting back, before you ever said a word, explain to this committee and anyone that's watching what kind of insurance we're talking about.
Oh, I'm sorry. We're talking about Medicare Advantage, retiree insurance, and the 4 starting 1/1 of 26. It would be current as of 1/1/26. So what they have now is the it is the HCSC because the transfer took place in March, and that will be the same. Everything's the same until 1/1 of 26. So even though they're not going to get anything, the branding, anything that says, to my knowledge, HCSC, it will still be Cigna, and they'll still be able to do what they're doing now instead of that change mid-year.
This is supplemental insurance.
No, this is
This is
regular
a-
health.
This is their
It's a
regular.
Medicare Advantage
It's a-
plan, it's not supplemental to Medicare.
Medicare Advantage.
Well,
I'm sorry, you've kind of lost me, and I hate to show my ignorance, but when you're 65, you go on Medicare,
You
right?
go on Medicare.
So this is supplemental to Medicare.
Yeah.
Yes.
That's what it is.
So it's supplemental. I got a
So-
no and I got a yes, so
It is.
is that on purpose, trying to confuse me more?
Define supplemental,
You're
please.
billing
Yeah.
all,
So there is a Medicare supplement, a type of plan that's a Medicare supplement, where Medicare is billed and a supplement is billed. With the Medicare Advantage plan, it will only be the Medicare Advantage plan that's billed. So in that way, it's not a supplement to Medicare as far as being billed. It's an entire plan on its own that will be billed instead of Medicare.
I've been on Medicare a while, okay. So's my spouse, so's my wife. And when you're on Medicare, and I didn't know anything about what you were just talking about, you file on Medicare and what they don't pay supplemental goes in and covers, for the most part. Is that what this is?
Not quite, it's a different type of plan.
Wow.
So It's the primary payer, instead of Medicare being the primary payer, this will be the only plan that's billed by the provider, and it will be the only payer to the provider. But it covers, it's able to be a richer benefit because it can cover more than just what Medicare covers, so it can cover kind of with Medicare and what a supplement would cover, so it can kind of fulfill both roles in a way.
And it also
like a
includes
roll-in
your
supplement.
pharmacy coverage.
Yes, this
I
is
mean-
It's bundling.
Yeah,
Yes.
it's a supplement.
How is Medicare involved in this then? How are they involved?
Medicare reimburses, like Humana, or they'll reimburse Cigna, the total amount.
What they,
And I
what they
guess
would have if you would have filed
Yeah.
separately?
Yeah.
Pretty
And I
much.
guess the simplest way is that they pay these carriers to administer these plans because they think they can do it better. And so they give them amount of money to administer it instead of, being on Medicare alone with a supplement.
We have somebody who in the audience has raised their hand, and so who says they,
Oh,
by raising their hand, I assume they can bring clarification to this issue. So the chair's gonna go out on a limb and assume that he's doing that right. You better bring clarity, is all I'm saying. If you'll step forward, introduce yourself, and tell us how we can clear this up, that would be great.
Sure. My name is Wes Dozier. And
Can you speak up, please?
My name is Wes Dozier, and I am with Gallagher. I'm not the person who led the Medicare part of the RFP that Ed was talking about, but actually Ed said what I was going to say right there at the very end. as
So
he said
could you,
it after.
for the committee, could you restate that, please?
Sure. The government, when it comes to Medicare, they have the option. Somebody who's reached age 65 can go on traditional Medicare, which is what I believe that you're used to, or they can go on a Medicare Advantage program. So the Medicare Advantage program just feels more like a traditional health insurance plan that you would have as a pre-65. And the federal government, rather than them being the administrator, they're actually paying a Humana, or they're paying an HCSC to administer the Medicare program for them and to use their network. And Ed was correct when he said, because Humana, this is all they do, or HCSC, this is all they do, they're very efficient at what they do. So the follow-up question is usually, well, if the government has Medicare, why would they pay somebody else to do it? And that's the reason. It's because of the efficiency. So the government can actually pay a Humana or an HCSC or one of the specialists. The government ends up saving money by paying a specialist who's just more efficient at administering Medicare than the federal government themselves. So all the commercials you see from Humana, say, hey, call in around the enrollment period, those are Medicare Advantage programs that they are trying to get people to call in for. It just so happens that Rutherford County is helping to sponsor the Medicare Advantage program. So it is still Medicare, it's just more of a traditional feel, which is actually a little bit easier for employees when they transition from pre-65 to post-65.
And Wes is coming up.
Thank you, Wes.
I'm sorry, Wes is coming up to do the ancillary part, because he put all the ancillary part together. And he was in on some of our meetings talking about Medicare, but it wasn't the part that he worked on, so. But he's with Gallagher also.
Any questions for Wes on that?
I'm just trying my best to grasp this. Thank you, Molly. It's a lot more clear. I didn't even know that existed. I didn't, really. That's kind of bad on my part, isn't it, Ed? But there are Medicare Advantage plans that doesn't do that, right? They're like Blue Cross Blue Shield Advantage plan. Is it the same thing that we're talking about right now?
So it's the way that I understand the question, I believe that to be something different.
Yep.
Medicare Advantage program is more of that what I talked about, where a carrier actually administers it.
Yep.
And I believe the concept of a supplement that you're asking about is when you're on traditional Medicare that the government is administering, then you can purchase a supplement that lays on top of that program. Whereas with the Humana program, it's really more wrapped all into one already.
Well, that's the reason I'm getting confused, because you call it an Advantage plan, and there's an Advantage plan out there, or some Advantage plans that out there that deal with Medicare first, and then Blue Cross Blue Shield has a Medicare Advantage plan with a zero insurance. So
Yes.
those are the things that run through my mind when you talk about Advantage plans. And this is a little different, and I understand that, but there are Advantage plans that are not set up like this one.
This Medicare Advantage plan mirrors what we had originally before we went to Medicare Advantage.
Okay.
And you can't buy this plan out on the open market. It's catered to the benefits that were there before. And you have to be careful, and I'm saying that because we have people call our office, Corinne talks to them, and they went out and bought a plan, and they're like, oh, and it's not what they thought it was. It was cheaper, and, but it wasn't what they're used to here with us.
Thank you, Wes.
Thank you.
Without objection, we'll come back in to session. And we are still open for questions. At some point, we'll need a motion and a second if we want to accept the recommendation.
We provide Advantage coverage, or we provide coverage for retirees and their families.
Yes,
So the prices that we're talking about are family plans, or is this an individual? The premiums that we're talking about?
go ahead.
This premium is an the rate that was provided is for an individual.
Okay, and if I were a county retiree and I had this plan, my spouse would not be covered. In essence, she would be on her own, like I am.
No, retirees are covered.
Not retiree spouses.
Retirees and spouses are covered,
Okay.
independents.
Okay.
Eligible for the plan.
So there would be, this would be a one-person plan,
Yes,
and if my spouse were on this plan, there would be an additional charge?
yes.
Okay. Is that,
There's a multiplier that
Okay.
gets you employee spouse, employee dependents.
okay,
When you add the spouse, it wouldn't be the 220 plus another 220. It'd be like a different rate.
If the retiree spouse is also on the Medicare Advantage plan, if they're Medicare eligible, then yeah, this price is considered to be a per member per month. So the retiree and the spouse, those are each members. So that would be $220 per member per month. And then that would be divided between the county's responsibility and the retiree's responsibility from there.
also backing up, I don't know any private company out there that does anything like this. I don't know of any, never heard of it. Okay, so tell me why the county does this. Why do we do it?
Because that's what is in our retiree benefits package when I came here.
Is that because you're working like a pool, or you're not negotiating a price for, say, me negotiating my own price, you're negotiating for the whole county?
Yes,
So it's a special thing for the county that wouldn't
Yes.
be offered to an individual.
yes,
And this is something that's not guaranteed.
correct.
Okay, so if the county, the current county, the mayor's office and county commission said we're not doing it anymore, then so be it, right?
Yes.
I'm really beginning to grasp things now, Ed, thank you.
And if I could comment, I think this is one of these things that we do as a county that provide long-term value, which makes working for Rutherford County, the government, a great place to work, because you're right. Private industry doesn't offer things like this. And so this is one of these things that for those who want to make a long-term investment into working for the county, they might find of great value. So I'm glad, for one, I'm glad we do it.
I'm all on, I'm just wanting to make sure
No.
that as long as I've been with the county, that this is new explanation to me, okay, so, thank you. I didn't mean to put you guys on the spot, but my mind is much more clear right now.
You should hear the conversations if you want to talk about it on the spot in my office, so this is easy, isn't it?
Well, I've got a couple of questions about the changes from Cigna. And everything that you mentioned here has been an improvement to what's offered. Is there anything that's on the current Cigna Advantage plan that has been taken away?
If we move to Humana,
Right,
yes. On page 3, I mentioned the maximum out of pocket
right.
goes from 1,250 over to 2,100. Green, if you want to explain tier 1 and tier 2.
I wasn't really interested about that. I'm talking about the other benefits. Are there any other benefits that's in the
In the
current
Cigna.
Advantage plans for Cigna that are deleted in this plan?
Don't think so.
Oh, yes,
It's not as rich. I mean, if you're asking, are they taking anything away? No. But it's not as rich as the Humana plan when you come to dental, vision that's been added in the Humana plan. And it is $30 per member per month more expensive.
you know what I'm gonna ask, but go ahead.
As far as our office has been made aware, no, there are, outside of the maximum out-of-pocket for the pharmacy coverage, the other benefits, there have been improvements. There have not been other benefits that have been taken away, as far as if you were to go to your primary care doctor or a specialist, skilled nursing,
Right.
or
Well,
benefits along those
just to
lines.
tell the committee, I am on the county's current plan, Advantage plan. And I'm here to tell you, it is an outstanding plan. My wife is a retired school teacher, and I'm able to have those benefits because I'm her spouse. And having said that, for the first 30 years we were married, all her insurance was covered under my policies at my workplace. Then the county decided that if you wanted to carry this insurance forward into your retirement, you had to change then to what you wanted it to be in the future. Well, at that point, she picked me up as a dependent on insurance instead of me, and the county getting hers free for 30 years. Y'all started paying for hers and mine inadvertently. But unfortunately, we've had to use this plan a lot. I mean, I've seen bills come through, and like she was trying to explain, Cigna is negotiating with Medicare, with these hospitals, and the prices that you get, you know, and basically, once we've paid our deductibles, they are picking it up. And when I say they are paying it, we're talking several $1 million a year in our case, unfortunately. But it's been an outstanding plan, and the teachers have the option to go to the state plan the way the current teachers go. So the retirees had that option too. And I've had a lot of them call me and ask me how this plan was working. That's why I'm wanting to know, is this, you know, are there any benefits being lost there? I'll give you, for instance, skilled nursing care. If you have somebody that has to have skilled nursing care, then our current plan offers 100 days of skilled nursing. Most plans only offer about 20 days. After that, you're paying probably $300 to $400 a day out of pocket, where ours is going another 80 days past that. So that's just one of the, to give you an idea of what this current Advantage plan is doing. But there are a lot of other benefits. You know, you've got dental, you know, basically these add-ons that you would have to go in and pay for. The Advantage plan has got that built into it. So that's the big difference to me. But it's worked well for us. You know, unfortunately, we had to use it, but you know, that's part of it while we're at it.
the only thought going forward, we've had this for a good long while, I'm assuming, longer.
22? 23. We started at 1/1/23. Yes.
I move to accept the amount of option 3.
Is that the correct motion, Ed?
That's the recommendation from the insurance committee. So
That would be the correct motion then.
Second.
We have a motion and a second. Any further discussion? Seeing none, if there is no,
I know
Vice
you're
Chairman
gonna call
Key.
roll, but I just wanna make a statement.
Please.
And I've already mentioned that I am on the Advantage plan, and I would intend to pick up whatever plan the county does. But I wanna, let y'all know that on the front end.
that is appropriate. Thank you, Commissioner. Any further comments or statements before we call the roll? Seeing none, if without objection, Carla, call the roll, please.
Yes, sir. Commissioner Gooch,
Yes.
Commissioner Phillips.
Aye.
Commissioner McAdoo,
Yes.
Commissioner Johnson,
Aye.
Commissioner Key,
Yes.
Commissioner Boyd,
Yes.
Chairman Carr.
Yes.
Thank you.
Thank you. The next on our list is the RFP for Life and LTD. Ed, explain what we're doing here, why we're doing it, and what this will essentially accomplish.
So if you don't mind, if we can have Wes come up, he's the one
We will
that put all this
go
together.
out of session without objection. Wes, you're back at the table. You can have a seat this time.
I was
Mr.
gonna say, you
Miley.
want me to stand?
You can
Sit?
stand or
I'm
sit.
good
I don't
either
think
way.
the committee cares either way. Make yourself comfortable.
And what I've passed out for you is actually on your iPad, it's a revision to that because we added the rates at the very back into that to make sure from an auditing standpoint, we had the rates that we need, so.
So, we endeavored to do an RFP process for the ancillary benefits. The first focus, though, was on the benefits that Rutherford County pays for. So Rutherford County, both government and schools, pays for long-term disability insurance for your employees that kicks in after 180 days. Also, Rutherford County pays for life insurance. They do not pay for short-term disability insurance, but that is a part of the conversation today because you really want your short-term and your long-term disability to be with the same insurance carrier. So part of the recommendation as I walk through this is giving consideration to consolidation, specifically with the short-term and long-term disability, so that if somebody is disabled and off of work, collecting disability insurance for short-term, that it's a smooth transition straight into the long-term because it's with the same company. So the process that we followed, of course, was for us to go out to the open market and solicit as many different carriers to provide bids for Rutherford County's benefits. So of course, the current benefits are shared with all the carriers. All of the claims experience, all the details that they need to provide quotes is provided to the carriers who submitted what's called an intent to bid, that said we intend to bid. They submitted their bids by the deadline, and then it was our job to go through and spreadsheet all those. The main thing that we focused on first was the price, the cost, looking for the lowest cost. But we also made sure that we evaluated that in terms of no decrease to benefits. In the insurance committee meetings that we were a part of, that was always a very important topic. So we were very intentional as we go through this about making sure that any of our recommendations that we brought to the committee and that we're talking to you about today is that there is no decrease in the benefits for these plans. We narrowed it down to a couple of providers that basically made the finalist rates. Everybody that submitted gave us either a 3 to 5 year rate guarantee, which is what you're currently doing. So there's a 3-year rate guarantees that are offered up front with 2 optional 1-year extensions. At the end of the process, the ultimate recommendations were for on the long-term disability, the short-term disability, and the life insurance to go with a company called the Standard. So specifically, the reasoning behind each one of those, I'll start with the long-term disability insurance. Because that's a county-paid benefit, long-term disability insurance is the most expensive of the benefits. Life insurance is a little bit lower on cost. So your current rate on long-term disability insurance, if you will, where that is.
Long-term disability, second page.
All right, so right there at the top of the second page, the current rate per $100 of covered payroll, monthly covered payroll, is currently 15 cents. So the current spend is approximately $672,000 per year combined between the schools and the county government. The Standard provided us a quote that takes the rate per $100 down to 13 cents. So this is going to be a savings to the county for the same benefit. No changes to the provisions or anything, of about $89,000. And of course, there's fluctuation from month to month as people come on and leave, so this was a snapshot in time, but that's approximate $89,000 savings on your group paid long-term disability. Short-term disability was a part of that evaluation. Like I said, this is the part that the employees pay for. Standard was also selected on that. One of the options that was recommended to the insurance committee was to add what's called a different elimination period. So an elimination period is how long you have to be off of work before your disability insurance starts to pay. So the current elimination period is first day accident, 7th day illness. But there's a lot of people that have been working here for a really long time that have several sick days that are saved up. So the recommendation was made during this process to add an additional, not take away, so the 07 is still there, but to add an additional 30-day elimination period. So with that elimination period being longer, that means the disability doesn't pay until 30 days, but that also gives the employees a cheaper option. So for those folks that have more sick days saved up, that don't need to purchase a 07, they can actually choose to purchase a 30-day period, and it'll save them money per month and allow them to use their sick days and then the short-term disability. The current rate on the short-term disability, there's a rate for people who are under age 50, and then there's a rate for people who are over age 50. So it's just two different age bands. The current rate per $10 of STD benefit is 63 cents for under 50. For over 50, it is 87 cents per $10 of STD benefit. The new rates for the same 07 elimination period, this is at the bottom of page 2, if you want to follow with me. The new rates for that same benefit are 43 cents per $10 of STD benefit for under 50, and 59 cents per $10 of STD benefit for over age 50. So everybody that currently has disability insurance and is paying for that out of their paycheck will have the same benefit, but we'll see a decrease to their premium come January the 1st. Go ahead, Ed.
Yeah, and since this is totally paid by the employee, you don't see a savings to Rutherford County like you saw with the earlier with long-term disability.
Yeah, so savings to your employees who choose to pay for this, but not a change
Not
to
county.
And then, of course, those who choose to go with the 30-day elimination period because they have the sick days, they'll save even a little bit more money. So short-term and long-term are together, so before I transition to the life, I'll pause and see if there's any questions on the short and long-term disability.
The recommendation though for the entire, both the LTD
and everything else was standard, correct?
The standard.
So this is a part of the same recommendation, correct?
Correct.
Please.
Which is the incumbent.
Correct.
I'm sorry, Ed?
Which is the incumbent.
Thank you. So I'm gonna pause and let, on this part, take questions from the committee before we move on to the next part of their proposal. LTD, I'm going back 30 years, okay? LTD went into effect usually at 6 months of disability. It's still, that's kind of what this is. And if you reach a certain age and you're eligible for Social Security, there's a combination of, in essence, you must file. Is that correct?
Correct. On the long-term disability specifically, there's provisions called the coordination of benefits. So if you become disabled and an employee becomes disabled and they're not able to work, this is, you know, layman's terms, not the contractual language, but basically, if there is another form of disability that you become eligible for and get accepted for, then there is an offset against what you're collecting. That does help keep the premiums low, but still make sure that the employees have the protection that they need.
Thank you. Let me just ask, who is Standard? I never heard of them before.
The standard,
Yeah,
it's just a carrier.
Yeah.
they've been around a while.
Yeah, yes, sir. They're A-rated, maybe A plus. They've been around for a very long time. Some of the insurance companies, it is funny. Yeah, you know, they're not on TV like Aflac, yeah, which Aflac's a great company too. Some choose to advertise. Some choose their business model to just work through brokers or different channels, distribution channels like that. So Standard is a very good company. That they've been a good carrier on the short term and long term.
Headquartered in Connecticut, I guess, right?
I do not know where they.
Most insurance companies are in Connecticut.
Yes, the Northeast does have a heavy saturation where people are headquartered. But yes, sir, they're very, very good company.
Yeah, and I think Molly and Corinne both will tell you their customer service is outstanding.
That's valuable.
It is.
Any other questions about this particular component? Okay, without objection, Wes, continue, please.
If you will go over to page 3, the recommendation on life insurance is also with the Standard. Your current life insurance is with MetLife, so MetLife is the incumbent. When we went out to the open market and we got bids, the MetLife bid came back in for them with a rate hold, but the Standard and a few other companies actually came in with a rate decrease. So your existing incumbent carrier did not make the finalist based on rate. So we had a couple of options between the Hartford and the Standard. One of the factors, like I talked about, was looking to see if there's any kind of efficiencies by bundling together. So the Standard was not only right there at the lowest cost on the price, but again, the administrative efficiencies, and even from somebody who's on a long-term disability who passes away, we believe that there's efficiencies in having all of those bundled together. So,
Are those efficiencies quantitatively financial? Are they almost exclusively administerial?
I would say, from a claims experience standpoint, once we get to the +1, because you've got a 3-year rate guarantee and then 2 optional 1-year extensions, there definitely can be some administrative efficiencies for the carrier, that could factor into whether or not they gave a rate increase or not in years 4.
I see what you're saying.
Years 5. And it's
So
also.
from a quantitative standpoint, it would show up in the +1.
It could. Yes, sir.
Okay, thank you.
On the life insurance, we also looked, sorry, I lost my place a minute.
Sorry.
No worries. I love the questions. When I'm just a talking head, those are the worst presentations, so I love when you ask questions. So currently your life insurance is at $35,000. And one of the things that we looked at this year, when we went out to the market, was to say, inflation has happened, funerals cost more, $35,000 doesn't go as far as it used to. So we looked at the $35,000 that you currently have. We also looked at $50,000, and then we also looked at 1.5 times salary up to a maximum of $100,000, because some of the other surrounding school systems do that. The 1.5 times salary up to $100,000 was cost prohibitive, so it was good to do that. But the increase to the cost would be a little bit over $200,000 to move to that. There's also a component of the fact that because this is 1.5 times salary to a max of $100,000, then technically one could make the argument that that does create some inequality of somebody who may not qualify for $100,000. Whereas some other people may only qualify for 70 or or 80,000 or less based on salary. The ultimate recommendation was the $50,000 policy was to move from 35,000 to 50,000. The increase in cost was an average right at 12,700 per year. And the reason that I say average is a part of these RFPs, carriers will offer implementation credits. So it's a credit to your bill that they'll give to help with things like building the benefits administration system and going out and doing the change from one carrier to the other. So when you factored in the standards implementation credit into that, that you get all in the first year, but if you average that over 3 years, the cost average per year to go from 35,000 to 50,000 is only an increased cost on life insurance of 12,700 per year. But you have your 89,000 a year in LTD savings that more than covers up for it. So the county has increased the life insurance for the county government and the schools, kept the benefits the same on the short and long-term disability, and still netted out a pretty significant savings every single year.
Questions? It's at those rates, can't purchase more.
So that's a great question. That leads to the back page.
Segway.
Segue to the last page. You can purchase more. So even though on the life insurance, because it's changing from one carrier to the other carrier, there is a concept that's called a continuity of coverage. So there's no loss in the transfer from one to the other. It's a group policy. There are some advantages actually when you do an RFP like this, and whether it's the incumbent who agrees to do this or whether it's the new carrier who takes over, there is a true open enrollment that's also offered on top of that. So true open enrollment means if you're an employee and you have, let's say, 100,000 on yourself and 50,000 on your spouse, well, that would transfer from the old carrier to the new carrier. You don't have to make any kind of change. Actually, the rates on the voluntary life insurance, what the employee's paying for it, they matched those rates. So they're not even going to see a change on their paycheck. It'll be the same rate for them unless they reach a new age bracket, which that's always been a part of the policy. It's age banded, so it goes up every 5 years. The standard match that, but during the first year, there's a true open enrollment. So somebody who has not gotten life insurance in the past, who may be uninsurable now, everybody's going to have the opportunity to enroll in life insurance up to the guarantee issue limit. They can add supplemental or extra coverage if they want to, without going through evidence of insurability. Once they go over the guarantee issue amount, they can apply for more if they would like to, but then they have to answer health questions and potentially have like a paramedic come out to their house.
That's what I was going to ask. So if you want to purchase additional insurance, you may be subject to a physical or something of that sort.
Yeah, up to a certain level is just they can get online during open enrollment and say I want it, and no questions asked. Once they trip that what's called guarantee issue level, then they can get more, and that would trigger the health questions and potentially the paramed, but not for the whole amount, only for the amount over the guarantee issue that they try to get.
But that would only be for this year, because if you wait and did it next year, then you would have to have, evidence of insurability.
Correct. So for the initial open enrollment for 1/1 of 2026, this guarantee issue would apply. Then it would go back to the regular rules, which is new hires are the only ones who get the opportunity for guarantee issue when
So
they're
if Chairman Phillips wanted to purchase some additional life insurance, since he's the interested party here, and he triggered that, let's say it was 100,000, he triggered that, who is paying for the health exam?
the health exam.
That would be required, that would necessarily be required.
Would it be a questionnaire?
I would need to go back and look at specifically, the different carriers have different rules, so I would need to go back and look at the standards rules. Typically, if it's just a questionnaire, that is at the expense of the carrier. Even the paramed has typically been at the expense of the carrier. I'll go back, I'll make a note, and I will confirm that. By and large, though, on a group paid policy like this, the overwhelming majority of people stop at the guarantee issue level, just because it's simple, it's easy, it's payroll deducted. Not that they don't, but the overwhelming majority.
I think you could get that information to Ed so that he could then feed that to the people who are interested beyond that. Thank you.
Yep.
Any other questions for Wes on this particular part?
Convertible? At some point in time, you retire or go on some type of permanent disability, it's convertible.
There are both portability and conversion options that are available in the contract.
And that's between the employee and the carrier.
It is at that point. So on the conversion though, again, it's, I'm going off of memory, like the contract language drives that. Typically on a conversion policy, you do have to exercise that conversion, from a term to a permanent life, you have to exercise that before a certain age. But the employees, it's staying the same as what they had with MetLife, but the policy does include both portability and conversion.
Does that conclude your presentation on life and LTD?
It does, unless you guys want to.
I just want to make sure, because we're getting to the end on this one. Any questions before we entertain a motion? Ed, would you again summarize the recommendation, please? And the recommendation is that of the committee and of your office? They concur with each other, is that right? The standard?
Yes, yes, sir. So here, the recommendation is to go with long-term disability, go with the standard, and to place, well, the recommendation is to place life, LTD, STD with the standard as a significant savings to the county, increase coverage amount on paid life to $50,000 for active employees using some of the annual savings from the LTD. And the retiree coverage amounts to remain the same. And also to increase from 500,000 to 750,000 the limit for life. I don't know if we touched on that, but
Correct, yeah. What you were asking about applying for additional coverage, if they did want to apply for more, the update on the life insurance just increased the maximum that they're allowed.
Up to 750 now.
Up to 750 maximum 5 times salary.
So moved, Mr. Chairman.
We have a motion.
Second.
We have a second. Any further discussion? Seeing none, if there is no objection, Carla, call the roll, please.
Yes, sir. Commissioner Gooch.
Yes.
Commissioner Phillips.
Aye.
Commissioner McAdoo.
Yes.
Commissioner Johnson.
Aye.
Commissioner P.
Yes.
Commissioner Boyd.
Yes.
Chairman Carr.
Yes.
Thank y'all.
All right, third and finally, Ed, or P&C, property and casualty.
all right, so I have
Here comes Susan.
Susan Thompson. In case y'all don't know, this is Susan Thompson, Assistant Director. This is Janet Cook with CCMSI. And she put the bids together for the property and casualty.
Commissioner Johnson, I think it was a good idea that we met at 3 o'clock.
I was thinking the same thing.
I don't think we're gonna make our 5 o'clock.
I'm glad I questioned it the first time.
Okay?
Okay, all right. So basically, we did the same thing. We took it out to market. We went to about 19 different insurance companies to see if they were interested in quoting. Still a tough marketplace out there. We did have about 10 different companies quoting, but of course they're quoting different lines of coverage. So basically, you're looking at the incumbent carrier that you had for last year on all lines of coverage, quoting again for the renewal. And then on the cyber, we had some optional quotes, and we had AIG who quoted an excess policy above the 1 million and 2 million.
On cyber.
On cyber, yes, correct. So I'll just kind of go through that if you'd like for me to. So on the property, it was with Travelers. They also,
On your iPads.
It's the second one listed on your iPad.
Yes.
the colorful one? Okay, yes. So the property, the policy limit was 250 million. They quoted the same at renewal, and the premium was expiring at 3,161,794. The renewal was at 3,635,712. The rate per hundred, the expiring was 0.132. The renewal was 0.1364. So we were looking at about an 11% exposure increase and about a 3.3% rate increase on that. So we went from our total insured values at expiring was $2,395,176,517 to the increase of $2,665,738,938. A lot of that increase was from portable classrooms. We had 14.9 million to 21.6 million. On the casualty, that is going to be your auto, your general liability, your public officials, and school board legal liability. That was with Princeton. The policy limit on that was 5 million expiring, 5 million on the renewal. The expiring premium was $1,068,845. The renewal premium was $983,985. There's a reduction there. If you'll recall from last year, we did pull out the contract school buses there. So that's the main reason that decreased. On the auto physical damage, the policy limit, that's with Hanover.
Casualty insurance is mostly injury.
Yes,
Injury
it's going to be your
liability.
general liability, yes, sir. On the auto physical damage, we've got a 25 million limit on that for expiring and renewal. That's with Hanover. The premium was at $129.39, and then the renewal is at $132,861. On that one, we had a vehicle increase from 885 to 934, so about 5.5% increase there. And then the values increased from 58 million to 60 million.
Is that just an increase in the price of patrol cars and things like that? Is that what you're?
Yes, sir.
And I believe we went from some leased vehicles to purchased vehicles, which make a little bit of difference.
That's ambulances, fire trucks.
Fire trucks, ambulances, everything.
Okay, and then on the law enforcement,
Can I back up on this casualty for a minute?
sure,
The difference there you said was, 1,068,845 versus $983,985.
yes,
And you said the difference in that was the insurance on the school buses?
Yes, sir.
Explain that, please.
yes, so, last year at the renewal, one of the things that came forth was Princeton, the current carrier, there was a change in the law, and they, provided about a year and 3 months notification that they would not be insuring the contracted school buses, and gave the contractors enough time to make sure that they purchased their own insurance. And so that's the premium difference from last year to this year.
Well, is that not something that the school board is negotiating with the bus people? I'm just curious. I mean, I understand what we're doing here, and I see now the difference. But I just want to make sure, and I thought that law had changed.
It did change,
Again.
yeah.
That is a true statement.
Well, exactly, and I don't understand exactly where we're at on that. That's why I was looking for clarification as far as the insurance and what's required by who.
Matt can help me on this, but I don't think the law had changed again. I think that the school board was negotiating with bus drivers to pay them to pay for their own coverage, not that we were gonna cover it.
And I know that's part of the negotiation. I'm just not sure about what state law is requiring.
So, to be clear, there was a cleanup bill that the governor just signed in this regard. I don't know, I can't tell you, committee, what's in the cleanup bill, but I do know he just signed it like within the last 48, 72 hours. I can't speak to exactly what's in the bill, but I do know there was a cleanup bill. So, and remember, a cleanup bill in the legislature is fixing what they didn't get right the first time around. And I don't know what the fix was, but that was the intent. So that's
You know
literally
anything-
all I know.
You know anything about that, Michael? Have you heard anything about it?
Yes. But if you're asking where we're at, I believe the school board offered a 17% increase in pay. They also offered a $4,000 per bus stipend to help cover the insurance, and then they would look into requesting the county to look into that law change and go out to bid. However, two things have not happened. One, we have not received an official request from the school board to put this out to bid on behalf of any bus drivers, or on behalf of the school board has not made that official request to us. And two, we also, in talks with the Fed's office, with Jeff Reed, we couldn't get a bid out in time to have coverage on July 1. So even if the law did change to allow us, we have to advertise the bid for so many weeks and go through this whole process again. So we didn't even have time to get that in place by July 1, even if Princeton did choose to bid. Because that's the other thing that would happen is we may read the law one way and Princeton may read the law another. And I will say that I think there has been some disagreement on the reading of that law.
That's an understatement.
But
And
I
what the
think
change meant.
But just to clarify, where we're at now, we have not received any request that I'm aware of. Either my office heads or the mayor's office has not received any request from the school board to put out any bids.
So the stipend stands as far as we know
Unless they
right
have a
now.
board meeting this week. The last I heard, tomorrow night. So the last I heard, that was their offer to the bus drivers. Is that it was 17 and 4? I think was their offer. Did something change? Oh, I'm talking about this current year though. So 17% for this year, then the 2.5 for the remaining 4 years. But there was a $4,000 I think per bus amount on top of the 17 is where they stood as of now.
I do, we got, work on the clock, and I want to be careful running about rabbit hole, Ed, so don't be concise. For the committee's sake, because this is an issue, how long, once we receive notice, if we were to receive notice from the school board, they want us to issue an RFP that would come out of your office. How long would it take to generate that RFP to get it on the street?
Janet, would you say 60? Well, to get it on the street, because
The RFP.
Because the county commission's not meeting in July, so it would, you're
Under
To me-
normal circumstances, how long would it take to get an RFP out on the street?
what, 60, 75 days?
60 to 90 days.
60 to
and
90.
That's what I need, that's what we need, we need to know that. It's okay, perfect, thank you.
I'd say closer to 90 days.
County commission meeting is on the calendar for July.
Okay.
Doesn't mean we'll meet, but it's on the calendar.
So,
I'll actually be purchasing the
Yeah.
commission.
anyway, please continue.
Okay.
I don't wanna,
Sure.
thank
Okay,
you, that's important.
with regards to the law enforcement, we're looking at the same limits. The 2 million limit is what is being offered with Greenwich, which is your incumbent. And then you've got a law enforcement excess policy above that at 3 million by Kinsale. That's to take it to the 5 million limit to be comparable with the liability. You'll see the premiums there are pretty much in line with where they were at expiring. And then if you get into the demo professional liability, policy limits are at 1 million, same as expiring, premium increase just slightly there. On the crime insurance, it's with Travelers. That was 500,000 limit at expiring and renewal. That actually decreased slightly. And then your firefighters group accident policy with Provident, that premium increased just slightly. And then, of course, we talked about the cyber liability. Your current limit is at 1 million. The expiring retention was at 250,000. Homeland Resilience actually quoted 100,000 retention, and the expiring premium was 55,450, and your renewal premium is at 50,450. So they actually went down on premium and went down on the self-insured retention.
Surprise.
Yes.
That's all
Big
I want,
surprise.
that's all I want to say about that.
So the recommendation from the insurance committee was to go with the incumbent on all coverages, and then also on the cyber liability is 1 million limit with the 100,000 retention
With Homeland.
with Homeland, yes.
How many, is this a 1 year, 3 year, what is this?
1 year.
It's always 1 year on property and casualty.
We tried 3 years and no one would give us any price.
That's a lot of work.
On the cyber, you said there was 100,000 retention. Can you explain that for me, please? 'Cause
So the county would pay the first 100,000 of each and every claim. It's more like a deductible.
all right.
So, a little bit further on that, county on a claim would pay the first 100,000, Homeland would pay the next 900,000, and then we would pay everything north of that.
That's correct.
North of 1 million.
Yes.
Thank you.
It's a lot of work you guys put into this. Thank you for that.
It is a lot of work for them.
Mr. Chairman, if there are no other questions, I move to approve the recommendation of risk management.
We have a motion. Do we have a second?
Second.
We have a second. Discussion. Seeing none, if there is no objection, Carla, please call the roll.
Yes, sir. Commissioner Gooch.
Yes.
Commissioner Phillips.
Yes.
Commissioner McAdoo.
Yes.
Commissioner Johnson.
Aye.
Commissioner P.
Yes.
Commissioner Boyd.
Yes.
Chairman Carr.
Yes.
Thank you.
I don't know why there's a 5 other business, because you're not supposed to have other business under a special called session. It's an error in the mayor's office, Carla.
She's just got an announcement, it looks like.
Our next meeting is May 13th at, I think, 4:30, which is the normal time. Vice Chairman Pete, I think you'll have 2 meetings of minutes you'll have to review, so I believe that's right.
Well, we skipped one today.
Chair, on the 13th, I know we have a budget meeting. Do we need to meet before? Do we need more time or?
Thank you, Commissioner Gooch. Vice Chairman P, you meet normally at 5:30 on the 13th, correct? Carla, I don't know what we have on the agenda. Do we need to move that to 4 o'clock? And if we do, we gotta put out a notice of time change. Do you recall what we had?
We've just got, the 2 under advisements, and then
Ours was taken care of.
the
Stop loss.
is questionable.
Yes, the stop loss, we're gonna extend it. We're not getting quotes, cause there's some, high dollar claims that they're waiting to see.
You're not ready for the 13th
So
for
the
stop loss?
13th, correct.
You are or not?
But-
Okay, fine. I just want to know what
I
the,
think we'll be fine on
okay,
time-wise.
we're gonna leave it like it is, and we will, if we can get, Commissioner Gooch to hold on the banter, we might get out in time.
He just told me he's gonna be a good boy.
If there are no objections, we're adjourned.
Wasn't I good today?